Hello, hello. Hello. That's better. Tom, you got some volume there? Thanks, mate. Ladies and gentlemen, can we please take a seat? Help yourself to a beer out of the fridge, water, soft drink, or wine. Pizza if there's any left. And come on up the front. Tom, we got the air conditioning on? Yep, beautiful. Or is that just me being nice and warm? Okay, you ratbags up the back there, Grant, come on up the front, please. I'll just say a quick welcome, and then I'll bring our esteemed panellists up. Michael, Tim, Matt, we have a seat, please, gentlemen. I get a bit nervous when people are standing. Crypto Recruit, you're in the house? Yes. Okay, thank you very much for coming tonight, everybody. And welcome to Crypto Sydney 2019. I hope everyone had a good holiday. And I know I did. Tom, have we got that video? Excellent. I had a great holiday. Let's just play this video, Tom. We'll have a quick snippet. We got some volume? Hey, fucking... I think I did. Gotta jump in. There she goes, Richie. Oh, yes. Watch out, DK. We're going to wrap it. He's going in front of the boat. Go left, Dan. Go left. That's it. He's fucking jumping a lot, Rich. Look at him. Look at him jumping. Very. First marlin on a Cobra. Listen to that reel. Okay, so big round of applause for Richie. We were sailing down the coast from Newcastle to Sydney on a very large 25-foot yacht. We had 4 lures out the back. For 10 hours, we didn't catch one fish. We were about 500 metres off Longreef, and we caught a 90-kilo marlin. Little bit of fun. Did anyone else have fun on their holidays? No? Okay, good. Excellent. It's all about me tonight, yet again. So, I want to welcome everyone here again. Good to see some new faces. Good to see some regular faces. We had BitMax doing a presentation tonight, but they've cancelled. So tonight, we're just going to have 4 of Australia's... Oh, hang on. Yeah, mate. And that's Lasanka Pereira from Independent Reserve, but we'll hear more from him later because he's putting his black Amex card behind the bar downstairs, and we want to make sure we chew up a few hundred, okay? So I'll be drinking mocktails all night. Okay, so let's start, let's roll. First, I want to welcome Fred Chubasta to the stage. Thank you very much, Fred, from Hivex. Been a great supporter of Crypto Sydney last year and back again. I'd also like to welcome Grant Coulthop to the stage, please, Grant. Yeah, Joe. Great supporter and one of the leading founders of the DAS WhatsApp crypto group. And if you're in there, it's exclusive. If you're not, talk to Grant to get yourself in there. I'd like to welcome the founder and CEO of Independent Reserve, Adrian.
Sure wasn't it? Sure wasn't it? It's good stuff. Yeah, you did well.
And who else am I missing?
Craig.
And finally, if we're talking about trading, who else to have in the room than Trader Cobb? Big round of applause. Thank you very much, Trader Cobb. Okay, great. So we all know well, for those that don't know, the way we roll here at Crypto Sydney is we get hecklers up the back, but most of the time we ask intelligent questions. So Oscar's going to have a microphone, cricket ball, football, whatever it's called, and we'll be able to throw that around. So lots and lots of questions. Start writing your questions down. Get them ready for the panel. I can kick it off with a few questions because I look smart then. But before we kick off with questions, we're going to give the panellists a couple of minutes or a minute to introduce themselves and talk about their businesses and what they do in the crypto world. Thank you. Do you want to start? Hey?
My pleasure, DJ.
Perfect.
So I'm Adrian. I represent a cryptocurrency exchange based here in Sydney called Independent Reserve. I suppose we're one of the oldest exchanges in Australia. We've been around since 2014. We incorporated in 2013. We built our own platform. We've always had a very pro-regulatory stance. We were the first cryptocurrency exchange to apply for an AFSL. We were the first to be regulated by AUSTRAC. We are the first to be audited by a Big Four auditor. We were the first to form a partnership with a Big Four to create a tax analysis product. And we're the first to be insured. We actually launched insurance on cryptocurrency holdings on Monday, so quite recently. And we're the only in Australia, and I think we're one of about 4 or 5 in the world. So this is the result of, I suppose, a lot of things that have happened behind the scenes for a long time. Corporate governance, doing things the right way, and just a commitment to, I guess, maturing, just bringing maturity into the industry and, bringing it in line with the rest of, I suppose, what, I suppose, more sophisticated investors would expect. So this has been our vision from the beginning, and we expect to be doing this for a long time to come.
Awesome, and we'll get back to some Q&A on the recent announcement. That's great. Fred.
Yeah, my name's Fred Chibesta. I'm one of the founders of finder.com.au. I'm sure you guys might know the jingle. Yeah. I've just been in New York City again, building out Finder over there. Finder's about 250 people now, so it's pretty intense. And been interviewing a lot of people on the daily exchange, so the YouTube channel is really what I've been focused on. And we run just a nice little OTC business called hivex.com, and it's going really well. Just continuing to onboard clients, and we just give a good service. And we write a lot about cryptocurrency, obviously, on Finder, and that's how we sort of got into it. And hopefully I can share some of I've met a lot of very, very insightful people in New York City, and where they're sort of seeing things and where they think the next moves are. So I can talk a bit about that.
G'day, I'm Craig Cobb, founder of tradercobb.com. We're a cryptocurrency trading education company, been trading for 13 years. Outside of that business, it's really a media presence. So we've had a huge success with our podcast, the Trader Cobb Crypto Show. I've been so fortunate to learn, like my education, I'm a trader, right? So my education is in this space about the people that I speak to. So I interview them. I've had Joe Lubin, I've had Vinnie Lingham, I've had some of the biggest names in the space, and it's been an absolute pleasure learning. And I try and do it in a conversational way that, I'm not the smartest guy in the room. I know what I know. Like, trading for me is like being a carpenter. I've done my time. I know how to make money. It's not the most enjoyable experience of my entire life, but it's a business that I run and I operate. What I get off on is building businesses and helping other people to understand things that might seem quite complex. So I really enjoy the podcast, the YouTube channel. We've got a huge amount of media partners that we're bringing on. We've acquired some new companies recently. Some you'll be aware of. We're silent partners in, and we're literally, my whole mission is to help individuals, not just in cryptocurrency. I've done this for years in traditional markets, but there's this thing called an AFSL. And to get a clean one, they're expensive, or to get one yourself, it takes a lot of time. Being an entrepreneur, I have neither of those two things. I haven't got a lot of time, and being in a startup, I haven't got the money to go and buy one for 100 Gs. So we're doing what we can do to educate others in the space, and we continue to push forward and try and help you guys, essentially, to get the gist of what's actually going up or down.
All right, thank you. My name's Grant Colthup. Left a corporate career about 6 months ago to found a company called Poesius Capital. Myself, like Craig, I've been a actual, trading personally for 15 years, professional trader for 10 of those years, 5 years as a portfolio manager running a portfolio of more than $10 billion. As Poesius, we're trying to do a few things, one of which for certain individuals would be, giving advice and things like that, building portfolios in both traditional and digital assets. The other part of it is then to actually start trying to create some type of STO market in Australia, STO advisory. I don't want to use that term more in the ICO, vernacular, but it actually is in creating, financial products, making those that are, compelling to investors, marketing those, bringing in investor, networks and things like that is my focus.
Great, excellent. Get your questions ready, but I'll want to kick off with a question to Grant to start the night off. Grant, we had a meet-up last year. Most of the people were here. We had about 250 people in here talking about STOs.
Yep.
We all know back end of last year was hot topic. We have had Christmas, been a bit cold in the US, but where are we at with the STOs? What's happening with the adoption? Some exchanges are out there, some aren't. Give us
Sure.
an overview, please, Grant.
Yeah, so I think, we've had openfinance.io out of the US has opened as a exchange. It calls itself exchange. There's some technicalities there. It's actually not an exchange because it doesn't hold any of the coins in clearing. But, the liquidity on that is very substandard. It's not actually investable at the moment. In the US, the most famous STO that was recently organised or structured was the Aspen, ski lodge. Here in Australia, obviously, we had famously people try and go do the island, which actually ended up being done via private sale. And so other than that, myself, I've actually attempted to do, been involved in one active STO campaign in Australia, and I'm actually involved in another one at the moment. Both of those have been very, very difficult to do. Again, because you're having to go to wholesale sophisticated investors, you can't advertise. It's very hard to know where you're going to list these things. So working with there's a company currently, it's a Singaporean company, but based in Philippines called CESX, is launching their STO platform at the moment in Singapore. If you're more real estate focused, you have Investor Crowd. And obviously in the US, you have Open Finance and T0 coming. But unfortunately for me, and this was actually, I was on Craig's show last year, was something I would have thought we would have seen more adoption towards the STO space. Obviously that's been delayed with the market just, suffering a complete collapse. And the other thing is, so I got to, like Fred, I was over in the US last year in September, October, got to meet some pretty decent investors over there, and one of them said to me, he goes, if we have it such that the SEC regulates this to be, stuck towards sophisticated private investors, he goes, well, that just looks like an unlisted share. Where's the benefit to that? ICOs was the fact it was a platform that was offered out to global investors. He goes, if you take that away, what's an STO otherwise? And I think that's the part where we're stuck at the moment, is that STOs are stuck in this netherland where they're only offered to sophisticated wholesale investors.
Grant, can I just touch on that, mate?
Yep.
Because the STO market's it's an interesting thing for me. Volumes have diminished significantly within our market, right?
Yep.
I mean, look, you go back 2 years ago, we're sitting at 5 to 6 billion a day, right? It's still, everyone goes, oh, how bad? But look at the growth, realistically, not with let's go to the moon, all that rubbish. Let's look at actual facts of where we're at. Do you think that the STO market is going to further how are you going to get the volume? And is it something that you're happy to just build? Maybe you're building a product for 2 to 5 years.
I think that's where it's come to now because of the basis, the fact that every jurisdiction globally is not going to allow these things to be freely traded. Open Finance, in my opinion, have absolutely shit their pants, and they've gone to the fact they don't even allow the tokens off the platform. They're ERC20s, but you can't even transfer them out. That type of thing to me just defeats the entire purpose of what these things are even supposed to be. I mean, you're seeing platforms now in that space, STO space, so currency, Securitize are probably the two leaders. Where they're getting a lot of people are getting very interested in that is they have recall functions, and that's what regulators are seeing as a minimum is to be able to recall the tokens back. If you have a non-compliant wallet and those tokens end up in a non-compliant wallet, the issue of that token, recall it back. And without compensation, potentially.
So it's a longer term play, effectively.
Definitely
But a more
turned into
secure
it.
one and the most legitimate in the space currently.
I think so.
As far as for an institutional point of view.
To a degree, yeah. I think there's few groups have done well of trying to flip the script. So they've gone from putting the token, and portability, global access up front to saying, look, at the end of the day, what we're going to do is we're going to go out, you're going to go do your private shares, you're going to have your private securities, whether it be a loan, a bond, something else, structured product. And in behind that now, we're going to have a digital registry. That is essentially an STO, except it's just not a token. And it seems that there are a few groups out there, there's a couple of guys here in Australia, one's in the audience tonight, who are starting to get acceptance with that type of platform. And I think that's how we're going to get adoption, is driving it from your really small SMEs who have, share registries, private share registries of maybe 10 to 50 employees. DJ's company would be a perfect example. You say he wants to go do a stock option, employee stock option thing for his guys. He's got 50 shareholders, all of a sudden he goes out to his 100 employees and issues them all, 20 shares each. He does it via this digital way. Many years down the track, they decide, someone wants to leave the company. Instead of then having them to go around and physically do some paperwork, you have a digital representation of it. Someone just puts up their 20 tokens, bang, gets traded.
So, Tim's doing that, yeah?
Yeah, that's...
Yeah. Put your hand up. Do you want to... Do you just want to give us an overview of what you've done there for some of the audience that may not have known?
Testing. Yeah, we did a presentation here last year, and thanks for the shout out. Essentially, we've been building that platform for 2 years. We started off as sort of having, it's just a digital registry service, so it connects into ASIC, and we've tokenized all of the shares in the unlisted companies on the platform, but we pretty much take care of all the compliance and governance for the company, and we've just launched an internal trading hub, so you can have through the issuer exemption in the Corporations Act, you can trade between yourselves as a private company, which means you can create liquidity already in these companies without becoming a listed entity and ultimately losing control of your company. So it's production. It does exist, has users.
Yeah, and how many companies you got on the platform?
We've got 140 companies and 750 users or shareholders.
Yeah, and any trading happening?
Yeah.
Yeah.
It's real, which is why we're very proud of it. So it's pretty advanced.
They just set their own price and negotiate.
Yeah, so the company secretary can do it as per the shareholders agreement. Eventually, we're going to tokenize the rules of the company into the company itself, but currently there's a manual step in the middle where the company secretary is obviously in charge of that.
Yeah.
But if the shareholders agreement states that the actual buyer and seller can choose that price, then they can. It just changes the price of the last trade, which ultimately starts to muck around with valuation of the company.
Yep.
And there's not a lot of liquidity in that company, so you don't want your last trade to be like 5,000 times more than the last share price, because that'll do some funny things to your cap table.
Yeah.
Yeah.
Yep. Good. Any questions to Tim on that? And the exchange name, the platform.
The platform's called MyStake.
MyStake.
Yep.
Awesome. Tax. Oh, Michael, where's my accountants, lawyers? We're not giving financial advice tonight, by the way.
Thank you for that.
Yeah. Okay, great. Any questions from the floor at this stage? Yep. Nice.
Adrian, the insurance offering.
Yeah.
So, who do you see being the biggest beneficiaries of this, or who are you trying to target, I guess, from offering that service?
It's a good question, because I suppose our view is, we keep very tight custody of client funds already. We actually don't feel like we present much of a risk, but I realise that the consumer perspective probably doesn't quite match that, because there are hacks on other exchanges. There was a hack on Cryptopia. Quadriga CX is experiencing a thing which no one fully understands at this point, so I won't make many comments on it. It's a thing. So let's leave it at that.
Did you find his body?
So I have not found his body.
Lasanka buried him good.
So we feel in order to, I suppose, drive consumer confidence into this market and to bring this market to a level that fund managers would expect, as I suppose people that would expect custodians to always have insurance of whatever they store with them, right? In order to take it to the next level, we need insurance. Whether I personally feel that, it's required or not based on all the things that we do is irrelevant. But I guess consumer perception is an important thing. And I strongly believe that having insured wallets and insured custodial services, which is already available in the US, not yet in Australia, will really help drive institutional investment and just a different kind of type of investor that was perhaps unable to invest into this space before insurance was available. So it'll just take it up a notch, and it's a necessary thing in the evolution of this space.
So does that mean that your accounts, your clients' accounts are insured when they open them?
So insurance is very expensive.
That seems like a very...
So we can't offer it to everybody by default.
An individual case by case.
So we have premium accounts where our customers can choose to be insured. Like, I wish we could just offer it to everybody, but it's still a very expensive thing.
It's like when you get your Foxtel subscription, you can go for the full movies and sports package, or you can go for the nothing package.
So look, we have
I think it's like in the rental car when the guy goes, "Do you want insurance for that?" I'm going to rip this bad boy.
Do we need more analogies? 'Cause we got plenty. We got plenty of them.
I've got another one.
Okay, so from our point of view, your funds are secure with Independent Reserve. Like, we treat them in the same way whether you're insured or not. But, if some unexpected event were to happen, the people who are insured would be underwritten by Lloyd's. And
Lloyd's,
that's
right.
important to, I guess, a certain demographic, and we want to make sure that we make this product available in the marketplace.
Don't get me wrong, you're killing it. I think it's a fantastic offering, and it's
Thanks.
credit to you guys and the hard work you put in, because Lloyd's and crypto, I never thought I'd hear that today in 2019. So well done to you. That's a huge barrier to overcome.
I appreciate that. I mean, look, as I said, it took 5 years to get here. It's not an overnight thing. There's a lot of things you got to put into place before you become an insurable risk.
Well done.
So, yeah. Cheers.
Yeah, that's great. And just,
I was just going to add something to that, DJ, if I can, because I think it's really key. I actually met with BitMax when I was in New York, and who were going to be here tonight, unfortunately, no. But they have a really key concept in terms of the market, and I think this is addressing a really fundamental part of it. Is they broke it down into 3 places. And a normal market runs like this, but crypto is kind of weird. You have sort of the top layer is brokerage, so that's where you sort of interface with customers. Then there's exchange, where it's like literally bids and offers and prices and movement. And then there's clearing. And the weird thing in crypto is that an exchange does brokerage, exchange, and clearing, which is not normal in most markets. Like Hivex does like brokerage, we don't do exchange, and we do clearing. Which is kind of weird that we do clearing, but that's just how it is. And I think that when that market disseminates, I think what's so crucial about this insurance and so awesome is that you're addressing some of that issue in that clearance phase, which is really important. And I think a lot of people are, I think it'll help bring more people in.
Yeah, cheers, Fred. And the whole thing about clearance and settlement and exchange, it's something we've been trying to explain to ASIC and the RBA for a while. We've had a number of meetings with them, and it's something that's obvious to us is very unobvious to them. But then I understand that they're coming from a different world, so there's a bridge that has to be crossed, and like we're doing our bit to make sure it does get crossed, and we meet in the middle.
I've just got one question up the back here. Tim's been burning to us, and then we'll cross down to the lady here.
Just for Adrian. So the insurance product, hello, up the back. Hey, insurance product pricing. Who's carrying the cost? The account holder or Independent Reserve? Can you give us an idea? Sorry, can you give us an idea?
Yeah, sure.
What type of cost?
Yeah,
you guys are actually.
I don't actually remember the costs, to be honest. We have, I think, 5 or 6 packages. and it's about 1.5 to 2 basis points. But if you have a look on our website, you'll be able to see the pricing. But obviously, it's very expensive to us, and we're running a business, so we need to make sure we don't lose money on it.
2 bips the customer is paying, is that right?
It's a little bit less than that, but there are different packages. Have a look on our website. I don't have the numbers in my head right now.
It's pretty cheap, yeah.
Hang on, there's about 4 other independent reserve employees.
Yeah.
No, sorry, there's 6 independent reserve employees.
I just want to clarify that it's actually 200 basis points.
Right.
Yeah.
Yeah, it says 1.6 to 2%.
1.6 to 2%
Thank you, IR Lounge.
from the
Which is-
from the executive IR lounge at the back of the room.
So, Lysanko, I assume you guys are taking a clip on that from Lloyd's?
You're taking a clip on that.
A very small clip.
We are running a business here.
So that's a
We're gonna-
yes.
we're gonna pay
That's
people.
okay. No, just interested. Thanks.
Tim, did you want to join the gents on the stage, or you're happy to have you up here with us, mate? Next month. Okay, question down the front here.
Yeah, so you mentioned,
Oh, that's-
yeah, sure, I can shout, right? So you mentioned that ASIC and the regulators don't understand liquidity and the fact that you also are vertically integrated across, post-settlement clearing and, all that sort of stuff. Can you unpack that a little bit more? Like, what is it about the regulation that makes it difficult for them to understand?
I assume that's a question for me.
Yeah.
Okay.
You brought it up.
I suppose ASIC is wary of, becoming the first regulator in, I guess, the G20 or whatever to regulate the space. So they're kind of waiting on a group called IOSCO, which is, kind of like a posse of regulators that meet up every now and then and have some drinks and talk about regulation. That's the best I understand it. It's maybe posse was the wrong word. I think Lasanka wants to take that one.
No, I was actually wondering, would we be cool enough to be part of the plan?
Now, look, so obviously the way we run a crypto exchange or any other crypto exchange works is different to the way the ASX runs, right? So the ASX has a lot of, I suppose, entities and a lot of different steps that do things over a period of several days that we do instantly. And there are reasons for that, and I guess the reasons are mostly kind of historical reasons. But I guess we've been able to develop a technology, as have other crypto exchanges, that can merge all these into one entity and also, reduce the times that it takes to settle a trade from 3 days to instant, right? So ASIC is concerned about what the risks are, about if they were to regulate a security that operates on an exchange that works very differently to what they're used to. And I can understand that. So we're trying to explain this to them and work with them and make sure we, I guess, reach a level of comfort.
Yeah, but what regulation does it challenge? I'm kind of curious. Like, is it just an understanding of the regulators? Because
probably
as I say,
mostly-
supply chain, just
It's probably mostly consumer protection, mainly from the point of view that they're final transactions. If you're mum and pop and you log on to ComSec and you accidentally buy 10,000 BHP, well, if you don't have the funds, it's not going to go through. But if you do it, they're most likely going to, in some instances, let you cancel that trade.
that's just counterparty risk, though.
Yeah, but in that point of view, from the crypto point of view, from Adrian's point of view, if he accepts that trade and that person does have that amount of funds there, that trade's done and final. He's not going to go and reverse that because he can't reverse it on the other side of the counterparty.
So all of our funds are pre-settled,
Yeah.
right? So if a trade happens, one of our customers can withdraw the tokens.
Yeah.
Done. We can't reverse it. They're not there anymore.
Why can't you reverse it?
Because, yep, we're clearing trades, but we don't prevent our customers to withdraw their funds. That would raise a lot of exclamation marks.
Traded two counterparties in funds remaining in both accounts.
Yep.
Could you reverse the trade in that situation?
We never would unless we had to, because a regulator compelled us to, but
End of the day, you're settling both of those trades.
we are, but also we don't, I suppose, we don't restrict either party to withdraw their funds. So let's just say you buy some tokens on IR and then you withdraw them. Then we can't reverse them because we don't have those tokens anymore.
So what you're saying is you don't underwrite the counterparty risk?
No.
The tokens aren't there
we have no counterparty risk because all of our customers pre-settle their accounts. You can't buy something unless you have the funds.
Yeah, it's not OTC. I mean, that's Fred's camp, right? He can knock back someone or look at someone comes in, goes on and buy 10,000 Bitcoin. They have no idea what they're doing, and Fred goes, "All right, mate, that's 156 million US dollars. Please show proof of funds."
Yeah.
They have squat. Well, you're not going to do that trade.
So we identify all of our customers. We abide by all the OSTRAC KYC rules, and we go way over and above what's required. And we don't let people trade unless they have funds that have settled into our accounts. And that means, say if you want to buy some Bitcoin or whatever you want to buy, you have to deposit money into our bank account and it has to clear. And if you want to sell some Bitcoin, you have to deposit the Bitcoin into our account and it has to clear. So we run no counterparty risk because we know you have the Bitcoin.
But you're saying they can withdraw it.
If you withdraw it, it's gone. We can't reverse it.
So does your insurance cover that?
You withdrawing your Bitcoin?
No, the counterparty who wants to buy.
Our insurance covers theft. So if you were to break into our vault, if you were to, somehow
Get your
pacify
password.
the guy with the gun, if you were to open the big door, if you were to get through all the cameras, so you should probably wear some kind of a cat suit or something and maybe get, strung in like Tom Cruise. If you were to get through the laser beams and open our safety deposit box, and then if you were to figure out all the encryption passwords, then yeah, the insurance would cover it. Yeah. But I would actually like to see you do it.
Okay, give us the
No, I'm serious.
location and we'll have a go. Another question over there. Question here, question there, question here first.
Grant? So talking about portfolio, your business is talking about setting up portfolios for clients or advising them on portfolios.
Yep.
Do you want to just give us some insight into your thought process in how you would construct them and maybe some insight into the diversification across different crypto assets?
Yeah, sure. So I think as the advisor, it's always my point of view to try to ensure that I create something that's financially prudent for the client. And if they don't like that, well, I've at least done my job and they can, seek advice elsewhere. I think the other part is always, Mark, is you've got to incorporate somewhat of the preference or the belief of the client, but not to the point of view that it damages the outcome that they're trying to generate. I'd be very hesitant on constructing a portfolio for anyone who wants to do it for 12 months. I think it's something where it's definitely a market targeted at someone who is under 40, who is, prepared to hold these assets for an extended period of time, trying to understand where potentially that value capture is. Unfortunately, at the moment, my advice is basically worthless because it's like, well, you hold Bitcoin and that's probably about it at the moment. And there's obviously, we're developing and we're starting to see some more differentiation there that you would want to hold. From my point of view, and from a lot of the people in the room, Craig and others would know this, is the main issue we look at is, from an institutional point of view, is the correlation in the market, and that's obviously one at the moment, and that ruins any idea of diversification. Is it's hard to build diversified portfolio when everything goes up and down together, and then you have some really random things like BitTorrent, launches on Binance platform, goes up 700%. Who thought Tron was going to rally lately? I mean, so things like that are hard to counter against. So I think coming back to Craig's point before, quality digital assets are going to take a while to get there. I think they're coming, but at the moment it's very hard. I mean, I'm happy to say to most people, if you've got a real chunk of money, put some in Bitcoin and that's about it.
But,
Tim Lee, does that mean my Tron's doing well now, does it?
Well, if you probably bought it at 20 cents though, so.
just a question on that. You said the magic word, advice.
Yeah.
What regulatory-wise, where do you stand on that? Because I know with my businesses that we've spent, lawyers, I love you. You're wonderful. And yeah, let's continue to have a good relationship. But we've spent so much money last year in my business is basically trying to get ourselves to a point at which we don't need to be regulated right now. But everything we do is based around the fact that All we need is a license. The market turns to regulated market like traditional asset classes, and we're good to go. And we've got all the certificates. We get everything we need. We operate as we are under an AFSL without being under one. I just think that's a smart thing to do. I don't talk about things I shouldn't. I don't talk about mortgage-backed securities. I don't talk about real estate. I don't talk about equities. I don't talk about foreign exchange, because this is the grey line where I can get in trouble. I know others in the space do, and I think that's whatever they want to do. You said advice. You're doing crypto advice. Where does that stand in the regulatory framework?
Yeah, I mean, it's a good question. And from my point of view, I'd never, I think saying Bitcoin is my one thing was not saying necessarily it's not financial advice. It's saying that it's the only digital asset I would feel is sufficient enough that I could have.
Clients, I'm talking, right?
Oh, so they're covered under. They would also be sophisticated investors.
Right. So you're dealing with sophisticated investors, which falls under obviously a very different framework, which is basically if you've got the money to be dumb enough to do dumb shit, then
do dumb shit.
Don't listen to Grant.
Yeah.
So there's more questions coming.
We'll have a good time doing it though.
Yeah. Hang on. Like I feel like I'm in a roundabout. What was that?
I'd be interested from Michael as to what the regulatory position was.
Michael. Here he is.
Advice on cryptocurrency products and whether that.
Great. Tim wants to know some advice on cryptocurrency products and where that fits in the regulatory framework, working with Piper Alderman, Australia's #1 legal firm in crypto.
it's a good question.
And the world.
Don't break into their crypto wallet because they're not insured. or are they? I'm not sure. Are they? Yes, potentially.
No, they use BTC markets.
I think they've been hacked.
You can compare them all on Finder. I think independent reserve's up there, but I think it's more of a feature.
While we accept crypto, we flip it to cash pretty quick.
Probably rank us high.
To date, I've not heard of anyone with a financial advice authorization on a license giving any advice around crypto, because any of the financial advisors I've met have all said, we don't understand it, and we're afraid that our insurance won't cover it. Or saying, well, it's probably not within the bounds. So it's super grey and not really covered at all, and I'm not aware of any decisions or disciplinary actions coming out of it. I think that anyone who's giving advice in this space who are holding a financial planner or advisor authorization is probably well covering their rear with lots of, this is super duper risky and it's not considered a financial product anyway, but we'll tell you anyway, you shouldn't put more than a tiny fraction of your wealth into it. That's how I think that anyone who's dabbling in it is dealing with it, but most financial planners I know are not touching it at all because they don't understand it.
Touching on those, I know you're going to come to this as well, but just from the average Joe's point of view, I've spoken to a bunch of financial advisors I know and my financial advisor, and what they'll say is, on the record, no. Off the record, can you teach me some shit about this? but there are some that are educated and they go, look, I can't advise on this. I can't talk about this. My whole bread is at stake. If I was to say to you, Mr. Jones, that Bitcoin is fantastic and it's going to go well in the next 10 years and give an opinion, which is all that is right now, then what they're doing is they're putting their bread on the line and they're putting their family and their whole career on the line because they can be struck off because there's no correlation between the two right now. It's you either do this or you don't. We're open to suggestions of new investment circles and vehicles on the percentile of X of your portfolio above X of your wealth. There is no rule for that as far as I'm aware. I'm not a financial advisor, but off the record, they're happy to talk. On the record, they just got too much at stake. And that's my 2 cents.
It's funny. It's February. I think I remember I'm having deja vu, Oscar. This time last year, we're in WeWork. Very similar conversations. We were talking about regulation, we were talking about education, we were talking about how good last year was, and we're talking about adoption. So big question here. I want to ask Fred, how are we going to get the upswing happening here in Australia and get the adoption back into the marketplace? I see the government's asking for calls on the ICO regulation, which is awesome. I hear we're going to be the next stronghold of crypto after Malta. You know, if the Labor government gets in, they make decisions very quickly, I hear. But yeah, so question for all of the panel probably. Let's have a chat about the adoption, and then let's get back to these questions on the floor. Thanks, Oscar.
Sure. I was going to hijack a little bit before that, but as well, because I think it would be good to get your assessment right now. What is the market like right now, Trader? Tell us, because I think everyone's sort of feeling where we're at. I'm interested in. So then we can also say, then what do you think is going to go from here? Can you give us sort of your snapshot of the market right now, trading wise?
Yeah, sure. The monthly's in a down. I mean, when I talk about this, I'm talking about Bitcoin, right? Because Bitcoin's our master. Bitcoin, we don't have an index in this market, but that's our index, right? Bitcoin, sneezes, the rest of the market catches the cold, so to speak. I have had 2 hedges short on Bitcoin in the last, in January. Both got stopped out. The second one that set up, I looked at it, I couldn't find a position, so I moved some to Tether. I'm short Ethereum Classic against the dollar. I'm long Binance against Bitcoin for about a week, since Friday. Me, personally, I can see us hitting 3. And I want it to happen because we need to have something, somewhat of a line drawn in the sand. If you recall September of 2017, who was around then? Yeah, we went up towards 5, I think the number was. We went towards 5. We pulled back from 5. It was a beautiful horizontal level, 61.8% fib, absolutely on the nose. I had all my buy orders in at 3,050, filled my bags, did well, got out. It was one of the best trades of my life, right? Dead set, no shit. It was one of the best trades of my life. Now, we're back approaching that level, and I don't do sloping trend lines. I look at horizontals because that's what people look at that look at shit that make decisions, yeah? 3,000, it was in September of 2017, the Gandalf, you shall not pass moment. And the market rallied together and said, nah, we're not doing it. And there was enough orders to kick us into that bull run that went absolutely batshit crazy, right? Now, that level is now being approached. Now, we have the monthly in a downtrend, the weekly in a downtrend, the daily in a downtrend, and the internal timeframes like the 2, the 4, the 8, the 16, the 12, they're just an absolute mess. So we've got to look to those the higher timeframes to get our analysis, to get our view, to get our opinion, to get our ability to make an understanding of what is. Not what might be, not what you want, but what is. And they're all bearish. So I'm stoked to be in Binance. I'm stoked to be in Tether, because 60% of my portfolio was Bitcoin. It's not any longer. Now, I'm not doing that. I haven't sold all my other holdings. I've consolidated a lot more. But I'm very much of the opinion that, look, I'm a long-term believer in this space. I'm not cashing out to bail out on this market. No way at all. But I'd be a fool with my skill set to not go, right, I'm going to move to Tether at 3,700. I'm going to get long Binance because I like that business model. I see it as being a sustainable model. I don't see Bitcoin going up from here. I have been wrong and I will be wrong again. This is not financial advice, but based on my analysis, I want us to hit 3 and I want it to happen. I have no time frame. The businesses that I'm involved in, right, from a growth and profit perspective as an entrepreneur, I want this market bullish because it makes my life so much easier. As a trader, I want direction. And I have direction. And it is bearish. And 3,000 is the line in the sand. Now, if we break 3,000, we don't hold 3,000, 1,800 is the next handle, and I can see us getting there if we break 3 with a bit of volume. My perfect case scenario for entrepreneur, my businesses, and you guys turning up at these events, i.e. remaining interested, is we hit 3,000 and we buy off of that level with a butt ton of volume.
Are you talking US or?
Yeah, US. Yeah, US.
So what's going to get the volume, Craig? What's going to get this volume? I understand you're doing a lot of education. Fred, I understand you're doing videos. Adrian, I understand you've got insurance custodian.
We've been doing lectures at all the universities.
Grant, you're doing advice. DJ, you're doing events, right? We did this last year. Now, what's going to happen this year? Trader Cop, come on,
DJ.
pull out the golden, the glass ball.
Look, there's no magic bullet, so you can just drop that right now.
Oh shit!
Speaking of dropping, this bloke's just knocked over 2 beers, not 1, but 2. Well done.
That's all right. The fridge is full. Back it up. Back it up.
We need to see the rubber hit the road. Right now, projects don't make revenue. Give me a project that makes revenue. Give me a way to value this. Give me a product to trade futures properly. Institutions are not going to come in big ways if they haven't got the ability to have a trust a market they can trust. Oh, but blockchains are trusted. Bullshit. BitMax, I don't trust them as far as I can throw them. Like Kraken's just come out with a new leverage platform, and I'm interviewing Austin soon. Austin's one of the founders of Kraken. I met him in Dubai. Really good bloke. Looks like Ashton Kutcher. So watch that one. For the ladies or whoever else. But no, the point is that right now we are not in the position where businesses are businesses. Prime example, NEM. Top 4 in the boom. $17 billion market cap. Now they're asking for $7 million of funding. Are you kidding me? This is a company that was worth $17 billion market cap. Surely somebody's at CTO and responsible and taking care of treasury management. Or apparently not. That is an absolute cyst and a cancer on this space. And until we get some smart people in there running businesses the way businesses are to be run, do we expect credibility from the masses and from institutions? Hell no. It's a laughing stock, it's pathetic, and it pisses me off. Sorry.
Great. Did you want to add one little thing to that?
Yeah. Credit card, bang bang.
Boom, boom. In the house.
I want to throw down. So I think I'm gonna call this like a sideways market for a solid year. Unfortunately or fortunately, regardless, doesn't actually matter. I'm not really a price predictor. I can't control it. But I want to talk about a story. I spoke to one of the leading cryptocurrency writer, Paul, at the Wall Street Journal. And he had a very interesting analogy because he's been covering cryptocurrency articles, right? And so he needs to write articles and needs people to read them for the Wall Street Journal. If he can't get his editor to write a Bitcoin article, if no one's going to read it, right? So he's directly correlated to the market as well, which is, he'll lose his job. This is interesting, in and of itself. And he attributed the same Bitcoin potentially to the idea, what he was seeing as like the CB radio. If you remember the CB radio, it's the one that truckers use basically. Yeah. And what happened was there was this massive craze. It actually became part of pop culture, and it literally just boomed, and it went like into movies, everything, right? And unfortunately, but it got so noisy that it became almost impossible to use. Now, if you sort of take some correlations to that, if you remember that big run up, and we went up with Bitcoin, and it got to a point, if you remember with Bitcoin, where it was like 3 or 4 days to move a coin or make a transaction, or whatever it may be. If you remember the fear we had, if anyone was stuck in the blockchain, I think I was stuck for a week once with Ethereum. It almost freaked me. It did actually go to sleep. Anyway, but regardless, we've got this down cycle now, right? And so just, if you think about it, it's because the CB radio just got too noisy, everyone got off it, everyone was like, oh, this is just for truckers, really, right? I think Bitcoin and Ethereum and all those kind of things needs to go back again, and we need to find another use case, right? We need to go back and go, okay, what's this good for? Because right now, as much as we look at it, criminals, drug deals, things like that are pretty, this is where they tend to hang out. Unfortunately or fortunately, regardless, I'm just going to say it, and it is what it is, right? People, that's what they deal in, right? They want to have anonymous transactions, they want to control their own money. So now we need like some more use cases, right? We need some new ideas, some new things. There's this idea right now as well of a store of value, right? Store of value being Bitcoin, and there's the Bitcoin Standard. If anyone's read that book, it's quite an interesting book to some extent. But the store of value concept is basically, is Bitcoin a place where you can put money and it'll stay there and be valuable? The issue is, right, if you look at, say, look at the bond market. The bond market is like I think it's $90 trillion, I believe. Is that the level? I'm not exactly sure. It's something.
It's a lot.
Like, it's ridiculous.
Might be 4 trillion.
But if you want to get say $4 trillion versus how much you could put of that into Bitcoin, it's kind of difficult, right? It's not like the levels. You're still going to have to buy a lot of bonds to go. People are going to buy these places because they need somewhere safe to store them. And if you're realistically, you're going to store your money, all of your money in Bitcoin today. Like, that's just the weather vein. Are you going to do that? Are you going to go like and everyday people, given they've experienced certain experiences in the past, we've got to get rid of that. And the best way to do that is to deal with that is to go forward in time. And they will forget. We'll be like, what run up? I don't even remember that. I don't know what you're talking about. I forgot all that stuff. And all the new people will start to enter, and they'll go, sweet, look at this awesome Bitcoin thing. They'll start using it for different things. And I think we're going closer and closer and closer. And there's 2 other things that I learned in New York, and that is, if you want to know, are institutions coming? The answer is yes. They're already in. They're already here, just that you can't see them. What happens in an institution is this. So a cryptocurrency or an ICO company comes along and says, we're going to build something that takes other companies, like in Google, 10 years to do. We're going to do it in 6 months. So everyone got their expectations burst, and we feel kind of annoyed by that. But realistically, what's happened is these banks, they take like 2 years to go and do what other small companies take to do. So if you think they all got in last year, I know for a fact they are in. They're already here. They're just not putting their hands up yet because they're not ready. It's going to take them 1, maybe even 2 years to get ready, and then they will come in so hard it's not even funny, because they're just planting all the seeds, taking up all the great little plots of land. They're putting on all their IT infrastructure and all those kind of things. That's what they take. The institutions, they do things slowly, conservatively. They take up space. They're already here. We just can't see them because they're not ready. And that's how institutions operate. They don't make big expectations and promises and don't deliver on them. Well, yes, they do, but but not like to the level they're not going to put their hand up and put their head up and just get shot down. Because right now they've been shot down all around the world by all sorts of things. But they are here. So what does that mean? It's you're looking at 2019, 2020, and you will see institutional grade cryptocurrency things going on.
Yeah, but and sorry, coming back to that, my little rant on NAM. I mean, cryptocurrency. Let's not forget about what this was meant to be. Power of the people, F the banks, all this sort of stuff, right? Well, unfortunately, this is why we can't have nice things, is the old saying, because dickheads come in and do the wrong thing. And then what happens after that? Well, we can't create an infrastructure ourselves within responsible entities because there's all these people that want to do the wrong thing for their own personal gain. What happens after that? The institutions look at that and big business looks at that and goes, wow, they're onto something here. Yeah, sure. That was scammy as all hell. Yeah, sure. It doesn't have the best reputation. But holy crap, does the technology hold something? Absolutely yes. They sneak in and they take a little bit and they take a little bit. And it's the same play as what we're doing now. Right now, the market being so subdued, it's prime acquisition time. Right now, if you've got the capital or if you've got the nous, you've got the team, you can scoop up some companies that if you've got the vision for 5-10 years, they're going to be worth a lot of money eventually. Now, you have to dig into your pocket. You might not make a lot of revenue, you might not. You might make 2 years of losses. But these companies don't care. This business, the industry is so small right now. What they're doing is they're buying up the western suburbs of Sydney. They're buying up Redfern. They're buying up Marrickville in 1990. Now, fast forward that about 1,000%. But that's to give you something you can relate to, right? They're waiting for this Sydney property market boom because they know it is coming. You look at all businesses exactly the same in my view. It's just a different technology, a different opportunity, a different time span. They're all the same. And the visionaries and the big businesses, they don't want to show their hand right now. You're bang on the money with that, man. Like, why would you want to? The second you show your hand, the market goes up.
Awesome. Question, David, have you got a question over there? Or, oh no, I've got one. Next. David, have you got a question? You do, don't you? I'll come over there in a minute. Mike Hulse first.
Thank you. Question for you, Fred. Thanks for sharing some of your learnings from New York already. You get the chance to meet some real heavy hitters that most of us in the room wouldn't ever actually sit down with. Who do you think we could learn most from, or who have you learned most from your most recent trip to New York, apart from Craig?
I interviewed actually Anthony Pompliano, and if you watch that interview, I had 16 pages of questions, right? So I'm managing the questions that I'm asking him.
Had to say your name was 4 of them.
And so essentially, each time he answered a question, he would answer 5 of my questions at once. He is so on the money. Like, it is insane. And the way that he's approaching that, like, he obviously shouts out, and he knows his place as well in Twitter now. Like, he knows who he is and what his place is in cryptocurrency and all those kind of things. And he's not really massive on the list, but he is so lent in and so knowledgeable about, like, I think I tried every area I could possibly question him on, and he had like a very, very quality response and answered 3 other of the next questions I was going to ask him about it. So I would strongly suggest that the guy from the Wall Street Journal, Paul, is he could go toe to toe with, pretty much anyone and throw down. So the Wall Street Journal, that journalism I would say is incredible. Obviously I speak to Jimmy Song quite a bit as well, and Jimmy's got some pretty strong developer understanding. So, will the Bitcoin go into this death spiral? No, because of this, this, and this. It's like, sweet, someone just told it to me straight, explained it to me. I think that's constructive, because I think Bitcoin, like you said, is the weather vane of what's going on, right? So you need to know about that. And I think if you want to know where generally the market's going, or I know Pompiano kind of tweets now kind of down with banks, up with crypto, kind of shtick. But I go on his podcast, and I think that's one of the great areas. Obviously, I'm trying to get as many of those experts out and share as much as they know all the time. Yeah, I hope that helps.
Great. We've got a question.
Hi, if that works. Justin Amos, nice to meet everybody. I think some of you know me, some of you don't. I have a bit of sympathy or empathy with the NEM guys. They didn't value their company at $17 billion. They were a disparate bunch of guys who tried to do good in Malaysia and in rural Philippines and stuff like that. And you're right, somebody should have gone like, we need to cash this and bank this, right? I get that, but they just couldn't get out of their own way with a governance model. So, bashing them. The market valued the company. That's not what I'm talking about. I've got a question for everyone on the panel.
Oh, I wanted to say something.
Yeah, well, I've parked that now. So, question for all the panel. Okay, hear about Bitcoin. We're going to talk about atomic settlement. We'll talk about that over a beer another time. But what do the people on the panel think about what's going to be the next global token issuance? What's coming up? What's going to be the fire starter for this year? And can they shed any light on why they think it's good?
I'll take this. So, to, I guess, the beginning of your question, I've met the founder of NEM. I understand, but I actually met this guy before NEM existed. I met him maybe 2 or 3 years before NEM existed. And he was a person who could not run a business. Like he had no experience of running a multi-billion-dollar company. He was a person with a vision, but he lacked the skills and the expertise. But he had the vision at the right time, and I guess a lot of other people did as well. And I suppose he capitalized on that. And I think a lot of the early ICOs and the early coins did that, and hence we're seeing why they failed. To answer the second part of your question, or maybe the main part of your question, I think this year will be the year of the STO. So once the regulators start to get on board, this is what we're going to see. It's probably not going to happen early in this year. It's probably going to happen late this year, I hope, or maybe next year. But this is the way the world's heading. So I think STOs have a really big future, and I think we're going to see that soon.
Great. Fred?
I empathise with NEM as well. It's tough when you get a punch and then everyone sort of pulls you down. So I think it's much respect.
Craig, you were so... We weren't very nice, Craig.
No, but I don't mean to be
and we're going to skip you this time, by the way, Craig. You're not allowed the microphone. We're going to go straight to Grant, and then we've got a question over here. Sorry, Fred. Back to you, Fred.
I actually think this year, I'm not sure if we're ready. I think STOs would be great. I think we might be smaller to start with. But I think the stuff that's starting to happen is gambling and gaming. Gambling and gaming are crushing it on cryptocurrency and blockchain. So wager. I don't know about wager exactly, but but I don't know specifics. But if you look at the DApp lists and what's making money, like these are actual businesses. Gambling and gaming. There are some incredible, really cool, nice little games that are starting to come out. Some really cool developers entering that. There's more stuff happening with non-fungible tokens, and gambling is it's moving from Ethereum now to EOS. which is interesting, right? Because they're getting faster and they have the transactions go through, it's cheaper, et cetera, et cetera, et cetera. So with all that infrastructure, so remember, I think we talked about this maybe last year, David. I went through this a lot about there's a phase of infrastructure, then there's a phase of building apps, and then infrastructure and apps, right? It goes through this phase. Remember the internet, we had dial-up, then we maxed that out, then we had to get some broadband, we waited for a while, then we got our phones. In the same way, I think gambling is doing that, right? And gaming. So they've moved from Ethereum to EOS.
So proof of work type blockchain to that.
Not so much about, I'm not going to talk about the mining and all that stuff for a sec, but let's park that. I'm talking about scale. And we had a promise, like infrastructure, in other words, speed, like going from dial-up to broadband is like going from Ethereum to EOS, right? So in the same way, if that's moved and it's a business that makes money, that's real businesses moving. That to me is something I'm interested in and where I think things are going to start to continue to happen. I think that, you know, a lot of the ETF stuff, all that, I'm not sure if that actually matters. I think Grayscale has 1% of Bitcoin right now, and they're fine. I think people can rebalance portfolios. Grant, I'm not sure.
I'm with you, Fred. I think the ETF thing completely overblown. Last year was great to get a bit of a price pop. Now it's never going to happen. Doesn't matter.
So I think what I love to look at are, and remember what built the internet? Pills, porn, casino. That's what built the internet. It's what builds every industry.
Say that again, please.
Pills, so drugs, in and of themselves, and all sorts of forms of them. Porn, that's what built part of the internet. And
Tell us about porn.
Well, you don't need to. I think you already figured that out, Craig.
And the third one.
And the third thing that built the internet was casino.
Hang on, he's a shy, balding young man who sits in front of a computer all the time. Oh, sorry.
Craig's parents have still got the adult control on Netscape.
www.tradecod.com. Excellent.
Yeah, so those three industries, those three industries have all the money. So like drugs are already in there. Gambling is starting to take off. And remember, the latest technology on the internet always came, you know, everyone talks about the army made, like, they got the latest technology. On the internet, the latest technology and the best conversion and the best stuff to look at is the porn industry. They kick ass. The best marketers are in that because they make so much money. It's like, regardless of anything, even though there's like, you know, RedTube and all those things, they're still crushing. They're still crushing.
How'd those porn ICOs go last year?
I don't think they're a thing.
No.
The US dollar seems to be performing quite well.
What's that one, Omar? Yeah? Is that the Aussie? Are they the Aussie guys? Or?
And Intimate Coin as well.
No.
Intimate Coin.
Oh, they're the Aussie guys. Intimate Coin.
Ruben.
In
Ruben
England,
Copper.
yeah. Are you, so on that point, are you going to list those guys, Adrian?
Probably not. No.
Probably not, right.
But I think Marcus will be a user.
Is he mumbling up there or not? Okay, back to Fred. Back to Fred. Too many cameras moving around.
No, so I think So Pills, Porn, Casino built the internet. They also determined, you know, VHS beat BetMax, right, as well. And you know, I think there's a whole lot.
Man's making some funny.
Prostitution is coming, apparently.
Okay.
Intimate Coin.
Intimate Coin.
We're going way.
Right. I'm gonna have to take control here now. Grant. The young gentleman up the back had a very serious question. We're skipping trader.
Yep.
Too many T's in that last comment. Skipping. Craig's out. Cobb's out. Oh. Grant, and then we're going back to the question over here from David. Thanks, Grant. Let's make it snappy. Let's roll.
Okay, very, very snappy was for this year, and it's a huge Aussie contingent on a very small investment base, was Algorand, I think was the project everyone was most excited about at the end of last year. It's all based from MIT computer science guys. One won the Turing Award, and MIT economists. Unfortunately, it sort of seems to hit some bloody pretty decent roadblocks at the moment, but you know, that was definitely my project of the year, and definitely, you know, out of our investor group, not financial advice, was significant money was put towards that. And we're still confident on it, but it's definitely not developed how we would have liked.
Good things take time, Grant. Relax.
So it's basically, it's a currency, so it is a Bitcoin competitor. POS, so it's moved away from POW, has a very, very complex mathematical formula. At the end of the day, what it does is what's called in the traditional FX world is a managed peg. So you come up with an idea based on some inflation, et cetera, what you think should be the expected path of the value of the currency, and then you put some bands around it, and you make sure it stays in those bands. But it's not like a tether where it's 1-to-1. Those bands are really wide, so they're about 25% positive, 25% negative. So, and then at those points, if it's going up a lot, they will sell a lot and keep it within that band. If it's going down a lot, they'll buy it and push it back in the band. So what the idea was for them is to generate a more stable currency, not a stable coin, but a stable currency that would allow institution adoption. It was driven by, so the largest investor, I know this only from proprietary information, is a significant Wall Street, talk about institution, significant Wall Street institution. And that was the way they saw it. It has the ability to develop something like smart contracts over the top. Unfortunately, as I said, they've spent a lot of time there. The foundation is based in Singapore. Silvio is the CIO of the project, spends a lot of time up there. He's been running boot camps all around the world for it. We still think it's going to be very positive for to give there some type of credible Bitcoin alternative with a very strong built-in governance mechanism of inflation and value. Just as DJ pointed out, good things have taken longer to deliver than expected. Mainnet was supposed to be last year. I think we're hoping for a April mainnet launch now.
And that's Algorand.
Yep.
Dave, I'm not going to talk about NEM, but I think
hang on.
No, I'm not.
Sorry.
Just coming back on what I'm going to follow up. My thoughts are with Fred on the gaming and esports arena. That's the other thing I'd add to it is that we get approached a lot by different companies that want us to advise or to do this, and we've not done it with any. Like literally zero, none. We've done none. No advisory, nothing. There's money to be made in that industry. We have not been interested at all because that's not our model, and we don't get interested by disco balls. Like the flashing lights all around us, we're not interested in that. We're very driven on what we do. But there has been one that we've been dealing with for the last 3 months now, back and forth. And anyone fisherman or fisherwoman in here?
DJ?
I'm in the wrong audience, aren't I? Yeah, so I know DJ you are, because was it a black stripe or blue? Black. Where were you? Off of here.
Yeah.
A little black here. That 40 metres of water. They're usually in January. Okay, anyway. I know them. I'm a game fisherman. I'm a game fisherman. I love fishing for marlin. I love fishing in general. Right? That's what I love. Now, we're in the position right now where we're working with an all-star team of esports people, business people, North American fishing people. Let me give you an idea of something. In North America right now, we've got fishing competitions here. In North America, I know a bloke that I met through this company. He does a 4-hour fishing tournament on a lake where they drill holes. It's frozen. In 4 hours, the gross of that is $15 million US. 15 million. There's 15,000 holes, and everyone pays X amount to fish their allocated hole. Fishing is the only sport in the world that has no world champion. It's the most popular sport in the world. And in North America alone, it's something like $78 billion. It's got more GDP than 23 countries, right? It is the single biggest market in the entire freaking planet. Nobody has connected those dots. There is no fishing world champion. We're looking at using the blockchain to bring this to the society where your bricklayer Jimmy Joe's down the street, who fancies himself as a good fisherman, through the algorithm. And this algorithm works because it's actually got the brook trout world record under the algorithm to roll it out. Now, we talk about adoption. People that want to participate in an activity and get a discount by using a token, that's adoption. They've got a reason, a why. Why should I learn about this? Well, we'll educate them. Why should I do this? It's about incorporating the why to a passion. And there is no bigger audience in the world than fishing. This sort of stuff will help to educate society, to allow them to understand what this new wave is from people that are not likely to be your IT specialist, your tech person, people like us. I think that's got a really big part to play, and I'm stoked to be a part of this one project, but it's not just a project, it's about what's next, and I think that's a big step.
Awesome. Question over here, David?
Yeah, David Chu. So there's a lot of talk around the STO and how that's a natural progression from the ICO world. Where do you guys see the ICO market? Do you actually pronounce it as pretty much dead and buried? And given the latest views on Binance Launchpad, which came out with the BTT ICO, and that did amazingly well in terms of crashing the site, basically, when it came out. Is the ICO market, is there legs in it still, or is it STO's the way forward?
Great question.
I have a very strong view, but I think that big promises, no delivery. Like like some of the concepts that were pitched, like we probably have, I'd say 75 engineers at Finder, and if I wanted to put my best crew on that, I'd still be looking at like 5 years to do some of the things that have been promised. Like just technically reality. And I think people will feel that now. They're going, oh, you know, if I want to, basically I think the reason why we're buying ICOs is to flip them and dump them. And if that's how Binance make their money, then eventually people will catch up to that and go, you know, why do I need to buy this BitTorrent thing or whatever it is, whatever this ICO next thing, next thing. Like I think now when people look at ICOs, they want to see, and that's what I think Adrian's talking about, STOs, you want to see some value, right? Some actual assets or something, and not just a promise, not just some ICOs, you know, without even a white paper, or with spelling mistakes and just weird stuff, right? It's just cowboy. Like that's the reality, I think, what we're all experienced and seeing. And that's what happened with .com. There were like, you know, there were companies without even a website, and then they got money, you know. I think that's sort of where that was at. But yeah, Binance made a lot of money. Binance made like a lot of money from that, and it's in their interest to do that. Like, but who's the people who end up with the token price that's 90% down eventually? I feel sad for those people.
I'm with Fred.
And that's the reality of that whole game, is that someone at the end of the day bought those tokens, or all these other ones at the prices when those other guys got out. And I just don't think that's cool. That's just giving us a bad rep.
Yep.
And there's a lot of people lost a lot of money, and that's what's making this whole game, like we gotta stop that whole show. That's just not the key. That's my view.
There was a way to stop that. The IPLs, but it didn't happen. You know about that? You know, comment about that?
The which ones? What was that?
Initial public loans. So there's a
Oh, yeah.
contract that when it hits the target, it pays back. But
Yeah.
it never worked out.
I think the reason why this happened is a lack of regulation. So regulation exists to protect consumers, right? And this is an unregulated market, and a lot of consumers got burnt. And this is why we've always been pro-regulation, and we understand that regulation is going to bring this thing into the mainstream. Because
Doesn't regulation plumb people into believing that there's some sort of security there? I mean, they can still get burned.
Of course, but a lot less people would get burned. So a lot of the things that happen in the ICO market would not have been allowed to happen.
You ordered all of that crypto that you've got in your exchange or whatever you
Yep.
said before. That's outside your insurance, I'd imagine.
So
So it's not just audited for insured people.
our insurance doesn't cover the price fluctuations. Like obviously we can't cover the fact that an ICO might drop to 10% of what it listed at. We can't control the market.
Regulation
Our
means
insurance covers
accountability.
theft. But yes, exactly.
No, regulation's accountability. If there is a framework, Well, yeah, okay.
Yeah, well, that's
I
life
hear
in
you.
general. I got caught speeding the other day as well, but you're not allowed to speed, remember? So,
No,
there's regulation and there's regulation. I've got a question up the back here.
It's accountability.
I've got a question up the back here, sir.
Jail with
Sir?
regulation.
Yeah.
The COMEX trades multiple times the amount of silver that you could actually keep. Like,
Not going to argue that, but it's accountability.
It's a regulated
That's what
market. It
regulation
wants people
is.
into thinking that there's real security in silver. But the thing is, a lot of those exchanges are trading far more than what silver's available on the ground. I mean, and it's the same
What
with
does
all
Pomp say?
exchanges.
Buy
But
Bitcoin,
if you,
short the banks.
if you audit your exchanges, then you show that you've got the crypto that that you're alleged to have.
Yeah,
I mean,
which we
that's a
do.
form of security.
Of
You're
course.
doing that outside regulation.
Look, we don't run a fractional reserve of any sort, but I do feel like there's a need for regulation on ICOs. I feel like a lot of ICOs have marketed themselves as securities. They have promised people returns that they couldn't deliver. They have fooled people into thinking that they will do things which they never meant to do. And if this had been a regulated market, well, there would have been more penalties. There would have been a higher bar for people to do this. So I'm actually, even though I'm more of a libertarian than I guess most people in this room, I am pro-regulation in this market because I've seen so many people get burnt. And I've seen mums and dads lose a lot of money because they were uneducated. They believed what they read. They didn't put in the research because, well, they weren't used to having to put in the research.
If companies like yourself show proof of what you've got, a
Yep.
proof of stake, so to speak,
Yep.
and show that you've got your stuff, I mean, that's going to basically weed out all of the people
That's not the problem.
who are illegitimate.
The problem is not exchanges not having the coins. The problem is ICOs promising things that they never actually expect to deliver. That is the problem. This is why the ICO market crashed, because people were promising things that were impossible.
So will any ICOs get up in 2019?
I don't know.
Binance-led ones, definitely.
Binance-led ones?
Yeah.
I think the ecosystem just changed. I mean, you look at some of the ICOs now that are going out there, and it's become a dirty word. Like people don't say ICO, they say token raise. The language has changed.
Someone's going to have to prove this right before people trust it.
Yeah. Well, Binance is helping, which is great to see. I think back on the last, did you have a question?
I have a question for all of you. So if we could start from the end and work our way down. What is your business model? How do you make money?
We charge a small brokerage fee on trades.
Okay, so for you, you just want volume regardless of whatever token gets traded.
Incorrect.
So you're saying that, ICOs, it needs more regulation.
You're asking this question from a revenue model, which is quite ridiculous.
Oh.
We have a reputation to uphold.
Okay.
If we list some shitcoin that goes to zero with no business model, that's going to cost us a lot more than like some brokerage fees that we make on the trading. We did.
Listed.
It's
So
a play chip.
So there's a lot of other good Australian projects out there. Why did you list that?
It's a commercial decision.
Right, and if you get paid at least the
I'm not going to comment on that, but we did a lot of due diligence on that company.
But if they did it,
It's not a yes. I didn't comment.
It's interesting to know, blockchain's all about transparency. So disclosure's a good thing. That's fine. We can make a decision, but it's good to know.
Sure.
fair play, fair play.
So
back to the lady.
How do you guys make money? Like, I'm just curious, because we're talking about regulation here, but
Yeah.
I'm trying to understand what is regulated, the trading system or the asset class itself.
So we have a long-term view. We're not going to spoil our business based on a short-term view that we may make some revenue based on some trade fees over the next few weeks. It'll be ridiculous and very short-sighted and stupid. So we've been around for 5 years, and there's a reason for that, because we make long-term decisions. So we're not going to list anything that we feel is not acting in the best interest of the consumer, and we're not going to list anything that we feel we're uncomfortable with. We've always acted as if we were regulated to a much higher level than we actually are. So that's the way we run our business.
So the question was, how do you make your revenue?
Oh, he
The
explained it in the first line.
Yeah, he said, by volume. Was that right?
No, brokerage.
Yeah, brokerage.
By brokerage, which is based on volume. Yeah.
Based on volume. I thought you refuted that.
What?
I thought you refuted the volume.
How many beers have you had, DJ?
Just not anything.
Catch up, mate.
I will. That's why we video.
So Fred, how
Fred.
do you make money? I'm curious. Like everyone here obviously is in this because they want to make money, right? So like, what is your business model? Yeah.
So,
how did you build a business?
I guess Finders, it's now 10 years old, and we just compare, in cryptocurrency, we compare exchanges.
So you're as old as Satoshi Nakamoto's yellow paper, yeah?
White paper.
Yes.
White paper.
Yes, that's
Sorry.
right. I should have bought Bitcoin back then. But so quite simply, we just compare exchanges, and then we receive a small fee from the brokerage, like Adrian was talking about, and we just do that on a really, really, really big scale, so all around the world. And then with HiveX, it's just a small brokerage fee as well. And then I don't think the daily exchange makes money, but I think it helps educate and, like Adrian said, like grow the industry, grow what we're doing, get the awareness out there. So I guess, yeah, Finder, I guess, to some extent is paying the bills. And that, I think we've sent about 36,000 customers to Binance now, verified. So it's a couple of customers.
You've said about 20,000 to us.
So you said about 20,000 Internet
Thanks,
Reserve.
Fred.
Yeah. So we're working hard.
16 last week.
So no affiliate referral deals?
Sorry?
So no affiliate referral deals, it's just pass them over, or you let the customer choose whichever exchange they want, or do they have to use Binance?
No, you can just go into Finder and they're all there. Depends on what coin you want to buy. So if the coin's not available, then yeah, we just don't list that exchange there. Some people, some sites, some places list some coins, some don't, and so yeah, we just provide that. That's a simple service, I guess.
Just like credit cards.
Yeah, so some credit cards, they provide certain services and certain lounges, certain frequent flyer points, all sorts of things. So like we compare over like 100 different categories now in about 21 different countries around the world. It's about 8.5 million people a month at Finder.
How many did you send to Independent Reserve last month?
I'm not sure.
Last month, I'd have to check.
Yeah.
There's been quite a few.
But there's been a lot of, yeah.
Not sure and he's gone today because there's about 6 of them sitting up the back of the room. Anyway.
But yeah, no, I hope that answers your question.
No, I think it's just like everyone's sort of mystified by this whole system, and there's slippage everywhere. So it's understanding how you guys monetize this, because you make money regardless of pricing, so long as there's a transaction, right?
And what's your background, by the way?
So, to be honest, a lot of this, I do a lot of pattern recognition, and so when you used to do paper trading and then went to ECNs, which is Electronic Communication Network, in the 80s, you saw a lot of junk bonds. So if you just change the wording, it would sound like penny stocks or junk bonds. So the question is, which one do you pick, right? So I'm interested in your model for transparency reasons, and it's okay.
So you're a patent lawyer?
A patent lawyer?
Patent recognition, DJ.
I was super confusing. You sound like one of those terms and conditions sheet. I don't really understand how you make money.
Well, it's because you talk about regulation and someone asks about regulation. So, it is good to know exactly where you operate and where you don't. And I think it's good for everyone here in the floor.
So sorry, what is your occupation?
I'll do a panel talk one day.
No, we'd like to know.
I work in fintech.
You work in fintech? Awesome, that's great.
Yeah.
That's a broad, narrow field.
On the slippage side, just to address one of the, side questions, they're not responsible for the slippage. It's the market. If the orders aren't there, I'm a trader, yeah? I've traded for 13 years. I've traditionally foreign exchange, bonds, commodities, stocks, whatever moves. Now, I focus a lot on cryptocurrency for the obvious reason of the volatility, right? But I will trade where the slippage is least, because that's an element of my trading that I can't control.
Sure.
So I'm not going to go and trade with a little exchange on margin that doesn't have the volatility.
Yeah. I'm not talking about slippage.
Well,
I'm talking about what's your business model. I mentioned it as...
No, I'll tell you my business model, but I was just trying to fill in a blank that I don't think was answered.
No, but fees are slippage. So, for example, interactive brokers, they charge a fee for trade, and that's part of it. You build it into your models.
Yes, but if there's a buyer and a seller and there's not the other side, the order book suggests you might get slippage. So it's not, these guys don't create that market, they facilitate that market.
The brokers charge a fee. That's what.
I'm not disputing that. I'm trying to help you understand how a market works.
Oh.
It's about buyers, and I'm not saying that from. I'm not trying to belittle you. Not at all. There's obviously a gap in the understanding. I'm not trying to be condescending at all. Buyers and sellers create a market. Now, if I go and trade with Binance on a token, I know I'm more than likely going to get better volume. If I trade on BitMax on margin, I know I'm more than likely going to get better liquidity because there's more people that are using the platform. Now, BitMax is not responsible for my slippage. They'll make their fee. Granted that, I know that. That's how they operate. I totally get the model. But it's not them that makes this bloke sell on BitMax, this bloke sell on BitMax, and 90% of the room of people that want to trade on margin sell on BitMax, and 2% trade on who knows Max.
So are you? So what's your business model? Are you a prop trader? Like, do you trade your own balance sheet,
Okay,
or do you
I'll
offer
get
it
to that, but do you understand what I'm saying? I'm just trying to fill in that blank. You asked the question about slippage. I was trying to explain it to you.
Minimum spread is defined by the fees, though. The minimum spread is mathematically defined by the fees.
Correct, but that wasn't what we're talking about. We're talking
So
about...
the minimum slippage is defined by the fees. It's not ridiculous to say.
No, but, yeah. All right, let's get away from this because we're talking chalk and cheese.
Yeah.
Like, someone who knows what
Security.
It's fine. I make money because I'm an educator. I've got several different businesses.
So you educate people about.
I've got several businesses of which make no money. The one that feeds me, give me the time to continue to do free education and all the stuff that I do is tradercobb.com, which we charge fees for education and my trading strategy.
And if you want access, I can give you a very nice discount code. Come to see me. My name's David Jackson. I'm from Crypto Sydney. Thank you very much.
I wasn't trying
now,
to be
Mr. Cobb, pass the microphone on. We'll go to Grant for one last wrap up for the ladies' question. And then
I'm sure there are people who come to you afterwards to ask you for your service.
Plenty. And that's why we go downstairs and have more drinks.
Okay.
Because these guys pay for them.
Very quickly.
Hang on. Last answer for...
Grant really wants to...
Yeah. That's all right. Very quickly. I make money either, via investing, trading, or people paying me for an engagement. If the question is, do exchanges make money via market making? Obviously they do. Obviously Arthur is as rich as Arthur is because Arthur is the main trader on BitMax.
No, he isn't.
Security.
Well, he's... outside of Star Beta here in Sydney, he is by far one of the largest participants in his own exchange. Let's be honest, he doesn't crash it at times when it suits him. But, of course, lots of exchanges are doing that. I know for a fact, my good friend here from IR, they are not doing that. Exactly.
Hang on. The question was how you make money. Have we finished that?
Yeah.
Good.
How much you a prop?
How much your engagement fees, mate? That's what we want to know.
Much?
Come on.
You can't afford a DJ.
Okay. Quick question.
There's a reputational factor to it, mate.
Reputation.
You're
just
a bit dirty for me.
Look
You've
at
been
you.
in
Look at you. Grant, a big round of applause for Grant, please. Woo!
All right.
But I tell you what, it's an honour to have him on stage tonight, and I think he'll be back as a regular guest. Thank you very much. Question here, and then to the gentleman in the front.
Cheers, DJ. Quick question for the whole panel, maybe just to shift the focus away from the past towards the future. A phrase which is bandied about quite a lot here is institutional investors. My question is, I suppose, very specific because it's targeting the two guys on the left, to my left, running exchanges. They need that volume, maybe to self-sustain over a long enough time. The two guys on the right, either counterparty to their trade or maybe to go along with the trade if the bigger guys are in play. On one hand, we're talking about spank chain, maybe fish chain.
Trout chain, please.
And then on the other side, we're talking about institutional investors, right? So Fred is alluding to the fact that, yeah, they're in there, they're building, they're spending money in a VC type capacity. But my question is, from an on-exchange trading standpoint, as markets currently exist, STOs when they will exist, who are these guys? What are their mandates? What are the AUMs? And can we expect to see any sort of recovery in on-exchange volumes over the next year? I anticipate it's going to be 5 years, but I just want to, I suppose, get a feel for the panel.
Okay. I'll start.
Let's check 10-4. This is Big Papa. Come back over. Yeah, Fred, really loud and clear. Coming down the highway here, mate. On VHF.
I think DJ's drunk.
CB
had to
talk.
happen and
CB
it's
talk.
happened.
Tim
DJ
Lee,
is
you're next, man.
officially
You're next.
drunk.
He's got sunstroke. But to answer the question, I think so. I met with some very large, I would say, algorithmic / high frequency trading firms in New York, which
They're flipped, right? They're not like in it for the long haul.
right. Well, I guess they're in it for the long haul, but yeah, they're sort of I guess they're market making to some extent. They're not necessarily.
I'm just wondering how like the in-store landscape is weighing up, say, Cryptopia, what's going on in Canada, looking at this space, like trying to allocate money to this space from an on-exchange trading perspective. What's that actually theoretically going to look like, or does anyone really know, or is it just something that?
As I said, the feedback I got was, if you look at, I think Circle has 600 clients. That's not that's not massive, right? And then when these guys I was talking with, they just said it's just a very small part of what they do. It's in there, and they're like, yeah, we want a hand in. We're not really concerned about which way the price goes, so they're not really prop trading. They're just sort of market making to some extent, but they're there, and they're just sort of they're just running their algos through it, and they're making money that way, right? I don't think that. I'm not sure about the level to extent of if you look at guys like in I think in Barclays there were 2 very big traders there, and they're not there anymore. I'm not sure if there's huge amounts of capital like that gone in. I think they're more sort of using existing technology and existing capital in a small way and just chopping away it on the side. I don't think there's like massive other inputs in right now. There are portfolios, but in the rebalancing of those I think are also happening. But other than that, I don't think it's happening.
I agree with Fred. I feel like the infrastructure is not quite ready yet. And I feel like, with our insurance product and I suppose other custodial services emerging in the last 12 months, this makes it easier for institutions to invest into this space. But to just kind of give you an idea of like a, not quite institutional investment, but maybe something, one rank below, we've had a lot of interest from SMSFs. So we've got about 8,000 SMSF clients right now in IR, which is quite a large percentage of our user base. So I suppose, obviously these guys aren't institutional, but these guys are like the one rank below. So we can kind of feel the start of the wave, and we've had conversations with multiple trading desks and banks in Australia looking for custodial solutions and looking for ways that are compliant with their regulations and with the things that they have to do that they can invest into crypto. So it's the space may not be quite ready yet, but it's definitely moving in that direction. So it's really going that way. I can't tell you when it will happen, and it's not 4 or 5 years. It's like 12 months or less. That's my view. It won't start with banks. It'll be prop desks for trading firms, and then banks will follow.
They're already doing it. Classify them as institutions. I suppose my question is the terminology.
I'm not going to get into semantics with you.
I think I probably get your question. Trust, and that trust is in derivatives, and the derivatives need volume. That's it.
Yeah, I think that's a fair. So the way I'd look at it is probably, like there's Fred touched on it, right? So you got the arbitrage quant, HFT quant funds. I would say globally, I would estimate at most would be 2 billion, and they'd be turning over as we know, very rapidly. Most CTA trend following funds would never. They wouldn't usually want the FUM of the entire strategy to exceed 10% of the market cap. So for whatever we think BTC's market cap is, you take 10% of that, that is at best the potential upside for the amount of CTAs that are going to be involved in Bitcoin at any one point in time. Anything outside of Bitcoin, as Craig says, that's not linked to a derivative has zero possibility of being owned by an institution at the moment. They're not going to own spot coins. They're definitely not going to own anything that may be Ethereum at best, but outside that, almost zero chance. It's going to still be, I think, as we've discussed, I think it's going to be driven by trading firms, are still going to be providing a lot of the churn volume, a lot of the interest. I think that's the only place where this potentially, in the short term, can grow. As for institutions, I think the big part will be, for me, the biggest, so there's been a few disappointments in this whole space over the last couple of years. One of them was, the collapse of Venezuela, and we don't see any buying in Bitcoin. The whole concept of a store of value should be that people want to buy it when they really need to buy something to get the fuck out of a country. Venezuela collapsed. Bitcoin didn't move, and we've had other, macroeconomic events of pretty decent substance since Bitcoin has been fairly liquid, yet it doesn't react to those events. That, for me, is very disappointing. That is showing me that people don't see it as that. They don't, the person in Venezuela is still trying to pay, they're trying to get every, whatever currency they have is to get $1. They'd rather try and stuff $20 in their pants than to get a stick and put a few Bitcoin, a 20th of a Bitcoin on it. When that shifts, that will help us a lot. And things like that is still where we've not seen that occur. One quick detour rant over ICOs. The thing that really pissed me off over ICOs, the main thing, was the big funds. So in this space, I'm happy to publicly say it, DNA, I think, were one of the worst perpetrators of perpetrating scams on the retail public. I think you had persons from that fund were held up as the arbiters of crypto knowledge, arbiters of, VC. They were the epitome of fucking San Francisco, yet they just crapped on the industry and pushed ICOs over pieces of shit.
I don't want to drop too much shade, but I'm pretty sure when I was in Korea, I saw one of the Fire Festival guys who is in the Netflix one.
Yeah.
At working for DNA.
Yeah.
So I don't want to throw all the shade, but that's some heavy shade.
Yeah.
It's the guy, his name, Mark. I think
Sanshade Mark.
Yeah, very shady. He's the guy who's the contract organizer. He's a contract.
He's the guy that was going to suck dick?
Yeah, ponytail. So he was literally, I remember in Korea.
Can't trust blokes with ponytails, mate.
You can't trust people without hair. So, wait. So
it's a choice.
Well, he's got nothing to hide.
No, but seriously, I would empathise with that, as I don't want to.
Okay, I'm back. So I just had an interlude. I just checked my blockfolio. Don't worry. I am not shouting the drinks tonight. So those guys from the exchanges that are... those people
up
left.
the back.
Those people,
next to Tim.
No. It's still there. Good. Stick around. I'm glad you're still here. Tim, I'm glad we are still here. We have a conversation about a stable coin to talk. It's all right, I'm back. It's all good.
DJ,
everybody,
last question.
No, we have a question here.
We have a question here.
We have one question here. We have one question there. And the final question is Tim Lee. He's been trying to get a question in for hours now.
It's a podcast. That's right.
Thorpe, did you want to ask a question? Are you sure? But will you come back next month? Good. That deserves a round of applause.
Yeah, well done.
And the reason this man's coming back next month is not only because of this amazing panel that have some of the best brains in the country, but it's because of you people out here asking all these awesome questions. Disturbing people, being annoying, and drinking too much beer. Great. Now, question please, sir.
Great segue, because in, let's say, regulation nirvana, I work in tax and I've got some auditors as well at KPMG. There's a whole bunch of waste in there, like in terms of compliance costs. What's the roadmap that look like if we get a digital currency issued out of the RBA?
Peter Zing.
But does the RBA have to issue it?
Doesn't have to.
Thank you so much for your question.
Whatever that roadmap looks like. Yeah.
I can definitely see efficiency gains to be made if all transactions were to be digital. It'll be a lot easier to to see everything on a blockchain. But I don't really feel like this is the way people want to live. I don't really feel like people want to be monitored in every transaction in their lives. I'm not sure if I speak for everybody here, but
we get monitored anyway. I mean,
I certainly
like
won't.
DJ's recording
like I'm buying data from companies who do bank,
So,
of course we get monitored.
Given the fact that I guess transactions are very easy for the consumer right now, which is why we have the whole apathy around payments, which is why Bitcoin cryptocurrency payments haven't really took off, right? Because people can just tap their card
Tap and goes,
it's so easy.
Yeah.
Like someone tells you to scan a QR code, and who wants to do that? I wouldn't do it, and I run a crypto exchange, right? So I have an incentive to do it, and yet I still wouldn't do it. So why would
That's
my mum
adoption.
do it? Why would my mum do it? Why would my friend from school do it? And like, if it were to be enforced by the government, I feel like it would have a lot of pushback, and I think a lot of people would question about the motives of why the government is pushing this thing. Because they're trying to fix a problem that's not really there from the consumer's point of view. Yeah, sure, maybe from the ATO point of view it's there, but most people don't really identify with the ITO point of view. So I don't see it as a thing that will be embraced.
Great. Second last question for the night from our esteemed friend over here.
My question's primarily to Adrian. Fidelity's apparently come online, and ICE are saying they're going to bring Buck coming online.
Yep.
I just wanted to know, as a founder of an exchange, what kind of effect do you think that's going to have on the market, particularly like the price of Bitcoin?
I don't think it'll have a huge effect on the price, especially not in the short term. I think it'll have an effect on, perhaps the institutional adoption. It'll give more of a brand recognition. It'll put a brand up there that people identify with, that maybe large fund, kind of large investors and fund managers are used to kind of seeing, and I suppose it'll push the institutional space. I don't see it as moving the needle in the short term at all. I don't think it's going to make it go to the moon.
Okay.
Not in the short term.
I think
a pity.
backed, just 2 seconds on backed. I mean, I wouldn't be surprised to see them delay. I mean, if they're going for institutional clients, why would you bring institutional clients into a declining, non-interested market? You get one shot at a new market, and then you got to wait 3 to 5 years. You've got to have a crack when the time is ready. I would imagine they'd keep the core development team, lay off their contracting team, be smart. I know that I've worked with ICE, and they are very smart.
Glad you worked with it.
Yeah, this is what I'm thinking.
I'm not interested in the glass barbecue.
Let's keep this moving. We've been here for a while.
The basic.
No toilet breaks.
I know. Trader.
Slave labour.
Sorry.
Yep.
Great, you're a trader.
I know.
The lower you buy, the more profit you might make.
Yep.
Perfect. Okay, and don't forget. 1 minute.
Thanks, CJ.
No, last question. Last question.
Quick question to everybody, and just in general terms, with EOS really taking that retail space, with in the enterprise layer, a lot of companies moving to Hyperledger, with ICOs dying, can Ethereum survive?
Personal feeling, I said this actually last year, not because I thought, it was even when ICOs were booming and I'm an idiot, but the way I looked at it was, from one point of view, is I didn't like the fact that Vitalik was not being forceful enough in the company. I always thought something like, that project needed someone to be a forceful hand. The fact that he wasn't going to do that, he wasn't willing to do that. There's, probably 3 legitimate dev teams, but then there's maybe fractionalized outside of that. That for me was the thing. I mean, did I sell my Ethereum? Fuck no. But, now where we are now, it would be they do some big centralized thing and get together and try to solve the issues in a very, very, large corporation style point of view and work through them and address what they think will deliver, enterprise value first, usability, blah, blah, blah. I don't know. It's a good question. I mean, it's all right. Start a DAO, yeah. unhackable. Yeah, maybe Adrian can insure it. You can't lose.
No. It's Lloyd's. Okay.
Sorry.
Yeah. Fred, final comment. Final comment for the night. Fred Shabasta. Thank you, ladies and gentlemen.
So I spoke in quite a lot of depth with EOS New York about, they've got a lot of governance challenges, and that's going to come to a head, and there's actually now a referendum system that just started last month, and they're going to kill ECAF. There's actually, EOS is going to start moving, which is fascinating, right, in and of itself. And then if you look at apps and so gambling and things like that, they're moving their technology to that as well. I think that's going to hurt Ethereum a lot. ICO market, I think as well, going down. Joe Lubin reorganizing consensus and laying off people. We interviewed the guy at one of the projects there, and they are really slashing internally what's going on. This whole launch of proof of stake and things like that, that's kind of fundamental, and they're really, that's going to take 2 years or whatever it may be. I don't think most people are going to build in the future on Ethereum this year. They're going to go and seriously look at other blockchains. Yeah, it's a long, long way to do anything with that one.
Okay, well, after that was awesome. Thank you very much. A big round of applause for our panel.
Do we get a goodie bag?
I beg your pardon?
Do we get like a goodie bag, like all the
Yeah,
really good
you get a goodie bag.
conferences
You
do?
get a goodie bag.
Do I get a plaque? Or
Downstairs, you
Some
get
ice.
you get a mocktail. But yeah, big thanks to Adrian. Thank you. Big thanks to Fred Shabasta. Big thanks to Trader Cobb, and my main man Grant. So we'll be back again first Tuesday of the month. March, April, May, June. We'll see you here first Tuesday of the month. Thank you very much, ladies and gentlemen. And for those that want to drink money, thanks to Adrian and Lysenka, we're going to the pub downstairs. We're not going to walk miles away. We're going to go to the pub downstairs called the Cidery. And Lysenka, that's all right. You can come to the Cidery. Yep. And we're going to drink thanks to Independent Reserve. So don't leave. And also, these guys are here to ask any questions. Thanks. Mate.